forecast for the current period, indicating that a slump in demand is spreading to previously unscathed areas. Stocks lower across the board today. In fact, we closed at or near session lows on the Dow, the S&P, and NASDAQ. S&P today down 65, drop there of 1.6%. The Dow down 344, down by 1%. NASDAQ down 238, a decline of 2%. 10-year yield 3.39%, with the 2-year 3.93%. Spot gold up 0.4%, 1996 the ounce, was trading above $2,000. We've got West Texas Intermediate crude 77.19 a barrel, down by 2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie there with the market overview and the earnings after the close. A lot, including PacWest Bancorp. We got their results. Stock was up about 13% in the aftermarket, still trading higher, but it is certainly pulled back from some of those stronger gains, still up about 9%. So let's get to it with our own Herman Tan. He is our Bloomberg Intelligence Senior Analyst for U.S. Regional Banks. He's back here in our Bloomberg Interactive Brokers studio. All right, so Herman, PacWest, this is one that's gotten beaten up. It was up down about 55% year to date. What do you make of the results?
A real sigh of relief. A lot of good numbers in terms of deposits. Deposits were down 16% quarter over quarter, but really up about $1.5 billion versus what they had updated on March 20th. So really good performance, and they mentioned deposits were up another 2% yesterday in the second quarter. So that's a sigh of relief. They also mentioned increasing the insured deposits to 73% versus about half at the end of last year. So another good metric that a lot of investors are focused on. And the third number that I would talk about is capital. Capital, they're targeting something around 10% versus 9.2% at the end of the first quarter. So
capital ratio?
Capital ratio, the CET1 capital number. So that's all three metrics look really strong and are encouraging that PacWest can weather the storm, unlike what's happening with First Republic.
And in the terminal, Bloomberg News have reported recently about how PacWest is exploring the sale of its lending arm. Will that end up freeing up some cash flow there as far as just juicing that confidence in the company?
I think so. It'll reduce some of the loans on their book, which will help the capital ratio. So that's just another example of the bank being a bit more proactive to manage their situation.
All right, so what's left in terms of questions when it comes to PacWest? Do you feel like they've cleared out any concerns that maybe we all might have had?
Yeah, it's just more how do they get to that 10% capital ratio? What do they need to do? How far along are they in terms of managing these asset sales and loan sales? What do they expect from further deposit inflow over the course of the next quarter or so?
This isn't a troubled bank.
It looks like that they've turned the corner. So that's what I would say.
Are we done with regional banks in terms of reporting? Who else do we have?
We still have a couple more banks that have done those FDIC deals, the assisted deals. So Near Community, which bought the Signature Bank assets, and then First Citizens, which bought the SVB assets. Those are still waiting, but we don't expect anything in terms of surprises on that front because they were strong enough to do these deals. So nothing on the surprise on those two banks are expected.
So should we expect the executives on the earnings call to take question and answers, unlike obviously First Republic we were talking about earlier yesterday, obviously did not take those?
Right. I think the report for PacWest is strong enough where they can answer questions credibly and should have answers to analyst questions that anything that may arise. So unfortunately, First Republic didn't have any good answers, is our take. The deposit story was so disappointing that the path forward is going to be a bit narrower, and you saw the news report coming out that they're looking to sell $100 billion in assets. We think that's going to be a tough endeavor, given the fact that where they are today and what sort of loan marks that will be required to instigate that sale.
Right, this is an exclusive, right? First Republic said to weigh up to $100 billion in asset sales, according to those with knowledge of the matter. I mean, it is interesting. What is what are the scenarios? Let's be fair. What are the scenarios you're thinking about when it comes to First Republic? Is it just a case or matter of time, or one of the scenarios we have to consider of just a complete government takeover?
I think that's becoming more and more likely. We're operating under the base case that the regulators don't want to take it over because it just creates a bit of a domino effect, and then the market spotlight shifts to other banks that may not be warranted. But First Republic's options are really narrowing, as I mentioned earlier. When you have 40% of your deposits exiting, and then the stock is down something 49% today, it just doesn't instill a lot of confidence with the remaining depositors.
49% today.
Just today.
And it was 50% at one point.
Correct.
Across that threshold.
Something I've thought about is how, when it comes to PacWest in particular, their revolving credit as far as how that's exposed to small businesses, but also commercial real estate. Are we able to glean any sort of indications as far as when we're looking at PacWest, if there's any sort of cracks there when it comes to that exposure they have to commercial real estate?
Yes, they mentioned that their non-performing assets actually declined modestly to 35 basis points of total loans. So it looks like at this point things the cracks aren't really materializing. We can't see it yet, but I'm sure that'll be another question, which hopefully they can answer on the call. So that's actually a great number to see that, and I would say that's really across the board from the regional banks that I cover, that we're not quite seeing the credit deterioration. It's modest at this point. Banks are talking about some normalization in loan losses, but a full-blown credit crisis really isn't there at this point.
I mean, is there value in terms of the assets at First Republic?
The thing is that if there is an opportunity for the FDIC to come in and close the bank, then any acquirer is better off just dealing with the FDIC and getting a sweetheart deal with the FDIC rather than dealing with First Republic's management. And you can glean into what's happened in the equity markets today, with PNC only down half a percentage point, and Citizens up almost 1%, because those are likely to be potential acquirers of First Republic's assets. So that you can point to that as the market telling you that some of these banks may be circling for a potential deal later on down the road if the FDIC does come in and close the institution.
And when we're talking about all of these names, obviously they would keep coming up in conversations, especially last month, about those concerns. But we had Western Alliance last week, came in stronger than expected with this earnings. Now you have PacWest. Is it more of these concerns are more exclusive toward maybe First Republic's own problems at this point?
I think so. I think that's my read after first quarter earnings, is that First Republic is the outlier, where you saw deposits down 41%, even with Western Alliance only down 11%, and they have a clear path of improving that number going forward. And then the others are down at the average only about 3%. So for the rest of the region, it's really an earnings problem where earnings is coming down from a high water mark in the fourth quarter, and will continue to weaken across 2023, but the contagion risk really isn't there, and really it's confined to First Republic.
So really a moat around First Republic, safe to say it at this point?
That's right.
Really interesting, and it'll be fun when we get through all of it. I mean, when you really kind of separate out First Republic in terms of it. So 8.8% higher, you had, I think, about 18% of the float shorted. It makes sense to see some of this bounce back.
That's right.
Because investors are being reminded that maybe they can figure their way through, specifically with PacWest. Herman, thank you so much. So great to have you back in studio, and just to break down as we continue to go through some of these regionals. Bloomberg Intelligence Senior Analyst for U.S. Regional Banks. He is our Herman Chan, joining us here in our Bloomberg Interactive Broker studio. As we mentioned, that stock, PacWest, is up about 8.7% here in the aftermarket, and we continue to get earnings here after the close.
All right, and that's ticker symbol PACW, and to your point, looking just on an annual basis, down about 55%, and then if you're looking at First Republic, ticker symbol FRC, down 90 23% this year alone.
All right, Bank First also coming out with their latest earnings. Just taking a quick check at what that stock is doing here in the aftermarket and pulling it up. Looks like unchanged at this point. So we continue to get some of the numbers. Bank First there, first quarter total loans $7.12 billion, a little bit higher than the estimate. Net interest margin 3.89% versus an estimate of 3.94. So just another financial to throw into it. All right, let's get back to world and national news. Off to Nancy Lyons. She's in D.C. Hey, Nancy.
Thanks, Carol. Treasury Secretary Janet Yellen is sounding the alarm again about the need to raise the debt ceiling.
The default on our debt would produce an economic and financial catastrophe.
Speaking at a Sacramento conference earlier today, Yellen called the debt ceiling showdown between House Republicans and the Biden White House, quote, an issue that could threaten all the progress we've made over the past 2 years. House Speaker Kevin McCarthy has demanded pledges of future spending cuts in exchange for lifting the ceiling. He is planning to put a GOP plan up for a vote tomorrow. President Biden insists the debt limit should be raised without conditions. Well, after making his re-election campaign announcement via video earlier today, President Biden this afternoon made a campaign-style speech before a major constituency, organized labor.
The president ticked off his accomplishments, from prescription drugs to computer chips, which he said Republicans would repeal.
We made a lot of progress because of all of you, creating jobs again. Manufacturing has come alive again. People can afford a decent health care. We're on the cusp of major change. It's time to finish the job.
The president asked the union leaders to help him spread the message that a second term is in the interest of their members, a significant number of whom having voted for Donald Trump. In Washington, Irv Chapman, Bloomberg Radio.
Tokyo-based iSpace says it's trying to communicate with its spacecraft that was set to land on the moon earlier today. The company's CEO says they lost contact ahead of the landing, and he believes it means the mission failed. iSpace launched its lander in December aboard one of Elon Musk's SpaceX Falcon 9 rockets. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
Big Tech reports earnings.
Microsoft earnings crossing the wire now.
All in all, a broad-based beat across all lines.
And Bloomberg brings you the headlines first.
Alphabet first quarter revenue beating the average analyst estimate.
The search results outperformed.
These have been such big engines in terms of overall market growth.
For breaking earnings news and expert analysis.
The big story around Microsoft is really AI.
Stay with Bloomberg 1130, the Bloomberg Business app, and BloombergRadio.com.
Financial advisors, are you looking to add or switch custodians? Are you going independent? Interactive Brokers provides lowest cost trading and turnkey custody solutions for all size firms. Trade globally from a single integrated master account with no ticket charges, no custody fees, no minimums, and no tech, platform, or reporting fees. Plus, IBKR has no advisory team or prop trading group to compete with you for your clients. Switch to the custody solutions that work for you at ibkr.com/RIA.
Dear Calvary Hospital, my father, Curtis Moore, is my hero. Now 96 years old, he has led an exceptional life of self-sacrifice. A Moffett Point Marine, a New York City detective, and a family man who cared for his children and grandchildren his entire life. So when other hospitals could no longer relieve his suffering or our family's emotional pain, we brought in Calvary's miraculous team of home hospice experts. Thanks to Calvary's doctors, nurses, and social workers, Dad was able to resume the quality of life he wanted and deserved, surrounded by the love of his entire family. And I became more than just his caregiver. I was his daughter again. Thank you, Calvary. Phyllis Robinson.
This is Frank Calamari. With Calvary at Home, experience our unique Calvary care right in your own home. Call us today at 718-518-2465.
Bridge Bank helps breakthrough ideas actually break through and remains dedicated to providing financial solutions to the risk takers, the game changers, and the disruptors, those committed to making the world a better place. Bridge Bank has been providing financial solutions to technology and innovation companies from inception to IPO and beyond for over 2 decades through its national network of banking teams and offices. Bridge Bank, a division of Western Alliance Bank, member FDIC. Bridge Bank, be bold, venture wisely.
Change can be disruptive, but at Bloomberg, we think bigger. Our sell-side solutions combine trading and automation with market-leading data, so you can evolve, scale, and embrace change. This is Bloomberg for the sell side. Visit Bloomberg.com/sell-side.
CohnReznick Advisory Assurance Tax. As business and private client needs grow in Florida, so is CohnReznick's team. Now with 350 people in Jupiter, Boca Raton, Fort Lauderdale, and Miami.
Bloomberg Radio, on demand and in your podcast feed.
On the latest edition of the Sound On podcast, I talked with Barbara Perry, Director of Presidential Studies at the University of Virginia's Miller Center, on President Biden's re-election bid.
For those who watch the video, they will see a little clip of Joe Biden running. So I think every opportunity that they can take to put him in settings where he's comfortable and where he can show that he is presidential and that he has the physical and mental strength to carry on, more is the better. But note that this was a campaign video announcement rather than one that was live and on stage.
What do you make of that? Is that of value to you? Because he's been criticized for it, but when you look around, Asa Hutchinson did the same thing. I think Nikki Haley had a video. This is what we do now. It's not so much about a live event or a news conference, is it?
I think that's so true. So it doesn't look like it's out of the ordinary. And moreover, we are such a visual society and a video society these days at all ages. The Miller Center, for example, where I'm at the University of Virginia during the shutdown and during COVID, really got a bounce in its online audience, which we've always been looking for nationwide. So that's just where we are now. It's where politicians are. And obviously, we saw this with the January 6th committee and the kinds of video and the kinds of media that they use now. It really captures people. So again, for people who saw the video, we'll see how fast-paced it is. Mm-hmm. And I think that meets, again, Americans, particularly younger Americans, where they are. But it also, the fast pace of it, I think, leads to the message that they want to get out, that Joe Biden's up to the task and up to the job.
Hear the full conversation on the latest edition of the Bloomberg Sound On podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television and the Bloomberg Business app. This is a Bloomberg Business Flash. It's 4:40 on Wall Street. We do check markets all day long here on Bloomberg with lots of earnings after the bell. Google parent Alphabet shares up now by 4.1%. It reported first quarter results that exceeded analyst estimates. Mandeep Singh is a senior tech analyst, and he's with Bloomberg Intelligence. He was our guest right here on Bloomberg Business Week.
Core search, it beat by almost $1 billion. So it was, given the macro environment, probably the best print that we have seen, from Alphabet in terms of digital ad spending holding up, and no impact whatsoever from ChatGPT.
After the bell, we also had a revenue beat from Microsoft. That's stock up now by 4.5%. PacWest Bancorp said deposits stabilized after a flurry of withdrawals in March prompted concerns about the bank's health. Herman Chan covers regionals with Bloomberg Intelligence.
A real sigh of relief. A lot of good numbers in terms of deposits. Deposits were down 16% quarter over quarter, but really up about $1.5 billion versus what they had up there.